Hello, this is the tradesight U.S. stocks and futures market preview and domestic economic data roadmap for the week beginning Monday, the 13th of January, 2014, and ending Friday, the 17th. Hope you're having a good trading week. Charts, as usual, brought to you by eSignal 11. Let's go through the daily charts first, then we'll look at some intraday action, then we'll look at the data that's coming out this week, talk about what to expect and how we're going to be operating. So, the S&P daily chart, as you can see, the S&P 500, not much this week. Last 5 days pretty flat. You'll see just how flat when we flip to the futures in a minute. So really to start the year, even though we've had some good volume, we had some great trading days this week. Monday, Tuesday in particular. I liked Thursday, a little bit on Friday. Wednesday was probably the boring one. Great trading days, but yet it doesn't look that interesting. But the volume has been back. We did trade, I believe, at least 2 billion shares on the NASDAQ every single day. It's the first time that's happened, I think, in like 6 months. Puts us at a 10. We can pull it up in a minute, but it puts us over a 10 billion share week on the Nasdaq. So let's take a look at that in a minute and see how that if that's really the case. Nasdaq moved around a little bit more, as you can see, but still no indications yet. Now keep in mind there is a rule about January, right? A lot of the times in January, if the market clearly heads one direction for the first 3 days of the month, it typically closes the rest of the month the other direction. So you can see the first 3 days were down, even though those first 2 days was that Thursday and Friday right after New Year's. Nobody was around yet, but the first 3 days were down. So if that statistic hold, we'll be closing higher later in January, but we'll see. Stocks, you can see that one moved around a little bit more. Got a gap on Wednesday, gap up. Biotechs were strong. Had some nice biotechs running. Take a look at BIIB, which is going to be on our list on the long side for Monday in particular. Amgen was on our list. It hasn't broken out yet, but it'll be on the list again, I'm sure. Let's look at some of the. Let's look at gold and oil real quick. Here's a look at the oil futures all the way back down to 92. Now, what's interesting about this is you can see we got the 13 buy signal back at the end of November. That caused a run. The pink risk line, that's your stop out line from the buy signal, right? So we got a nice run out of that from 92 all the way back over 100. Now we've started to roll over. We're going to be, if I include this last bar on Friday, we're now 8 bars down. 9 bars will be a new startup phase. Here's a look at the pink risk line. You can see that was the exact support. That's amazing right there. But certainly we've seen some weakness in oil. Interesting time of year for it, considering the cold that's been going on. Here's a look at the gold futures. Gold's been pretty unexciting the last year, to be honest. Let's look at some of our key stocks just to see what they did this week. Apple down, making new lows for the last month and a half, stuck between a static trend line and a risk line for the last month and a half. Going to break eventually. That is not today is 9 bars down on Apple for a startup phase. Here's a look at Google. Didn't do much this week, gapped up on Tuesday. So net up for the week, but the last few days pretty uneventful. Amazon, another big trader, has not done anything for weeks. It's trapped under the risk line of that 13 sell signal. Netflix rolling to the downside, completed a 9-bar move to the downside startup phase on Thursday. Tesla, another one we trade, hasn't actually been that exciting, has it? Pretty slow there in general. All right. By the way, I was pointing out to Amgen. Let's take a look at this. Nice looking chart here on the daily. That'll make the report again, I'm sure, for Monday. And also the BIB Biogen looking good for a breakout. This will be on the list for Monday as well. We had some nice winners this week. By the way, ISIS was a long call. Look at how this thing has just run really, really nicely. LGND, another one on Friday, starting to break out. So a lot of nice winners this week. Some of it to the short side early, a little more to the long side later. Either way, we had a good week in terms of the stock trading. So let's flip this now and take a look at the intra-day action of the week. This is 10-minute bars on the ES. This is the S&P E-mini futures. Now keep this in mind. The ES trades about 16 points or 16 handles of range per day on average. Okay. The high here is 1838. That was the high of Thursday and Friday and the close basically. The low here is 1818. Basically, that's about 20 points of range for the entire week when it trades on average 16 points per day. So you can see, especially Tuesday and Wednesday, were not very exciting, even though we had a decent run at it Monday, Tuesday. I didn't do very much Wednesday. It was really poor. Thursday got a little better. Friday, again, both days look very similar, don't they? Gap up, pull back, bounce over lunch, rise a little bit in the afternoon. Tuesday and Wednesday, very flat. Monday was fun. we left this gap behind below here after the close on Monday. But overall, no seeker or comer sell signals or buy signals, no 13s throughout the whole week because the ranges were so narrow. Let me flip it to the NASDAQ side so you can see a little bit better action. Almost got a 13 comer sell signal here on the NASDAQ to close out the week, so we could get that easily on Monday with 2 bars up in the 10-minute time frame. But again, flat on Wednesday. You can see why Tuesday was a little better for trading, because on the S&P or the ES that was pretty flat. But here, Tuesday a little bit better, Monday decent, Wednesday just nothing. Thursday a little bit, Friday a little bit. So again, hey, with the volume we've been seeing, and I'm going to pull that volume number back up here real quick that I wanted to show you guys, but with the volume that we've been seeing, which has certainly been improved, you take that, you throw in some movement in the markets, and it's hard to complain about the action we should get. And again, I don't need 5 solid days in a week. I need 2 or 3 to really make some good money. So here's a look at the 5 days of this week at volume in the NASDAQ. See those 5 days bunched up there? That's this week, the 4, 5, 6, 7, and 8. Don't worry about the counts there. But look how high that volume is. Obviously, we knew the last week of the year, it's always awful. That's just a given. January came in that Thursday and Friday. It came back to kind of what we've been seeing, right? And we got a little bit of help from news on Siri, and BlackBerry had a little excessive volume. But still, overall, 5 days in a row with volume over 2 billion shares. Look at the entire last 6 months of last year that you can see. Yeah, there's individual days every here and there. A lot of them options expiration, where you'll see volume over 2 billion shares. News on something causes it. But for the most part, volume last year under 2 billion shares a day. Certainly no full weeks where you saw volume over 2 billion. It's encouraging. Let's not get too excited yet, but it's certainly encouraging. And we haven't seen what everybody was looking for, which was all those stocks that were up so much and nobody wanted to sell them last year. They haven't come in, jumped in, and sold them. Doesn't mean they won't. Still, it's not always an instant thing. But again, you go off of that first 3 days of the year rule. January should be higher. They can easily piece out of these if that's the way this thing goes. So, volume's up. It's encouraging. Ranges were up. I thought the trading this week was good for stocks. Less so for futures, of course. But hey, we'll just see how it rolls from there. We've got some nice year-end numbers to show you on the Forex side as well, by the way. So let's take a look now at the economic data coming out this week. The focal point of the week ahead is very simple. Options expiration, and then we're going to roll into the core 8 days of earnings as well. So that's what we're going to be focused on. Obviously, with options expiration on Friday, you look for Wednesday for the potential options unraveling move, and then Friday be a little bit dead, I'm sure. So we've got Treasury budget in the afternoon on Monday. No big deal. Retail sales, import-export prices, and business inventories Tuesday. That's enough to at least move the market around. Wednesday, PPI, Empire Manufacturing, MBA Mortgage Index, the crude oil data, and the beige book in the afternoon. Again, the PPI could move the market, but usually doesn't. Thursday, initial and continuing jobless claims. That's your weekly numbers. You have the CPI data, which is a big number, could easily gap the market. Long-term tick flows, Philly Fed, NAHB Housing Market Index, and Natty Gas. And then you go to Friday where we've got even more data. Look at this. Housing starts building permits, industrial production, capacity utilization, Michigan sentiment, the first one for 2014, and the JOLTS job openings. So there's a lot of data coming out this week, plus options expiration, plus the start of earnings, and the first comments from CEOs and such about what they're seeing looking forward into the new year, what they think the economy is going to do. Obviously, we've got a new Fed chairman as well. So a lot of stuff going on, a lot of good volume. I'm hopeful. Remember, from a trader's perspective, we don't care if the market goes up or down. We actually just wanted to do one or the other, not go sideways and trade some volume, and we're seeing that. So hope to see you in the lab. We can make some money this year. Have a great weekend.